Welcome back to Trade Insider. So, Budget 2026 drops, and bam, the market just tanks. We saw total panic on every screen. But was all that chaos the real story? Today, we're going to cut through all that noise to find out. We're going to decode the immediate shock and find the much bigger long-term signal that's hiding in plain sight. All right, let's get right into it. First things first, let's talk about that big market shock. I mean, this was the noise that just dominated everything, right? It was on every single trading screen. It took over every conversation the second that budget hit the news. And yeah, shockwaves really is the perfect word for it. Because this reaction, it wasn't just, a little negative. No. It was a genuine jolt to the system that put the entire trading community completely on the back foot. And the scale of this sell-off, it was just staggering. We're talking the Sensex plummeting over 1,800 points. And the Nifty? It crashed right below that really crucial psychological level of 24,850. It was an absolute bloodbath out there on the trading floor. So what on earth caused all this chaos? Well, it all boiled down to just one single line in the budget, a steep hike on a key tax that hits active traders right where it hurts the most, their profits. And that tax is the Securities Transaction Tax, the STT. Now, for anyone who's not familiar, it's basically a direct tax on transactions you make on the stock exchange. But this hike specifically went after the futures and options segment. And, that's an area that drives a huge chunk of the daily trading volume. So, okay, the short-term traders were obviously panicking, running for the exits. But that brings us to the million-dollar question, right? Does all this panic mean this budget is actually bad news for your long-term portfolio? Well, the answer might just surprise you.
All right, let's move on to our second section, the manufacturing first pivot. Because this is where we find the real signal. This is the big strategic play that was hiding behind all of that market noise. And this slide, it just perfectly captures the government's two-pronged strategy here. Look, on one side, you've got them deliberately jacking up the cost of speculation with that STXT hike, but then at the very same time, they slashed the cost of production by cutting customs duties on really critical manufacturing components and minerals. It's a classic carrot and stick move, plain and simple. And make no mistake about it, this wasn't just some random tax hike. The government is playing the long game here. They are literally architecting a high-tech, self-reliant, or, at Manir Bar, ecosystem. That STT hike? That wasn't the end goal. It was just a tool, a way to steer capital towards a much, much bigger vision. And hey, if you need any proof of that vision, just look at this number. A jaw-dropping 12.2 times lakh crore rupees in capital expenditure, or what we call capex. This is the government putting its money where its mouth is, big time. They're directly funding the very foundation of this whole new manufacturing push. And to put that number into perspective for you, that's a full 9% increase from last year. So this isn't just some line item in a budget. It is a massive statement of intent. They are absolutely doubling down on building up India's productive capacity. We're talking factories, ports, all the real, tangible assets that create real, long-term wealth. Okay, so with all this capital about to be deployed, the big question is, who wins? Where is all this money actually going? All right, let's follow the trail. Well, the budget lays out a super clear roadmap for what a lot of people are starting to call a manufacturing supercycle. And the focus is squarely on these strategic sectors. We're looking at high-tech areas like electronics and semiconductors, essential supply chains like chemicals and biopharma, and of course, critical resources like rare earths and minerals, textiles, and even specialized equipment. And of course, it's pretty obvious, right? You can't have a manufacturing boom without the infrastructure to back it up. And that's why there's this parallel mega push happening at the same time. We're talking brand new high-speed rail corridors, upgraded national waterways for transport, and these huge freight corridors that are all designed to make logistics totally seamless, not to mention big upgrades to urban infrastructure. But look, it's not just about the big guys, the giant industries and massive construction projects. The budget also gives a really targeted boost to two other crucial engines of our growth: technology, and, you guessed it, small businesses. This budget is definitely betting big on a future that's driven by deep tech. The government is pushing really hard on initiatives like the Semiconductor Mission 2.0, and they're even developing new AI tools for more traditional sectors. Think agriculture and ports. The whole idea is to build a competitive edge right from the ground up. And what about the backbone of the economy? The MSMEs.
are micro, small, and medium enterprises. Well, for them, there's a really clear three-pronged push. First, making sure they have liquidity by getting them to use TREDs. Second, there's a 4,000 crore self-reliance fund to give them equity and help them get stronger. And third, a massive 10,000 crore champion SME fund to help them scale up and become real champions in their fields.
So, what does all this mean for you, the investor? How do you take this big, high-level strategy and actually translate it into a playbook for your own portfolio? Okay, let's break it all down. And this quote right here, this is really the key takeaway from all of this. For the visionary investor, today's market volatility isn't a red flag. It's not a warning. It is a strategic entry point. It's a green light to go.
So here it is, the long-term investor's playbook. Step 1, you've got to look past the noise. Focus on that massive 12.2 Lakh Crore signal we've been talking about. Step 2, use this dip. This could be your chance to build positions in quality stocks while they're down. Step 3 is simple, follow the money. That means focusing on manufacturing, infrastructure, and tech. And finally, step 4, trust the strategy. You're making a bet on India's long-term productive capacity.
And really, that's the bottom line here. This budget has drawn a very clear line in the sand. So the question I want to leave you with is this. In this new economic landscape, are you going to follow the short-term market noise, or are you going to listen for that long-term strategic signal? Let us know what you think down in the comments. Thanks for tuning in to Trade Insider.